Hey everybody, time for an update. Not a whole lot going on really. Some of you have been asking me about gold, so I think I'm going to start off with gold and silver. This is classic behavior of the metals. Every time we get a fear of being closer to a Fed rate hike, they sell it off. Eventually the Fed hikes rates and the market goes higher. We've had 3 rate hikes since December 2015 and gold is up over $200 since those 3 rate hikes. Now remember, the rate hikes were supposed to crash gold down, but it's actually higher. So this is classic action, and what we are seeing now in the last several days has been some liquidation. If you look at total open interest in gold futures, it has come down since last Tuesday. It has come down by 20,000. So we've gone the total open interest from about 475,000 or 479,000 down to 459,000. And that doesn't include today's action, which I'm sure probably saw either more liquidation, or if we saw a build in open interest today, a lot of those speculative longs are starting to get short down here at the bottom. But we'll see. We'll see all the numbers tomorrow in the weekly report from the CFTC, the Commitment of Traders. And of course, I cover that in my MMT report every week. I have the whole breakdown of the net speculative position. And actually in silver, the liquidation has been larger. It's been 25,000 reduction in total open interest, not including today. So it might be a lot bigger than that. All right, so we have that going on. That does not affect the longer term picture, and which is price hikes. I don't call them rate hikes. I call them price hikes, price increases by the central bank, by the Fed. That is an inflationary force, an inflation driver. Okay, so that remains in effect. We did see in the CME has that FedWatch tool. You can look it up online, and that gives the probability of a rate hike at each Fed meeting based on where Fed fund futures are trading. And right now for June, the probability is 75% that we're going to get a 25 basis point rate hike. So that's why the gold and the metals are coming down. Oil, how about that call? Methinks it was a fantastic call. I don't hear from Methinks anymore. Of course, it's an unrelenting bull. He'll go back to that with the stock market, but he's really quiet on the oil, which I called the sell-off, and today we were down over $2. We're in the 45 handle already. Woo! Wow. Now, as I mentioned in some emails that I sent out today and also yesterday, there were some things. There was one thing, big thing. I don't know, maybe not so big, but there was one thing in the inventory report yesterday which makes me a little bit curious about whether or not, we could get a good buying opportunity in oil on this pullback. But I think I need another week of data to see what's going on there. But there was something in there, and if you want that email, if you want that insight, all right, again, just sign up for my letter, 30-day free trial. You can cancel, 30-day free trial. MMT Trader, go to my website, pitbulleconomics.com. Right there on the front page, it says, get the 30-day free trial. All right, some of you have taken advantage of that. So that is good. Stocks bouncing around, basically going nowhere. We have seen just out today the weekly release of the Fed's factors affecting reserve balances. Reserve balances at Federal Reserve banks down about $60 billion in the week ending yesterday, May 3rd. So that, again, we see this connection between withdrawing reserves or adding reserves. That affects the banks, that affects their leverage ratios, that either enables them to go out and buy more assets, or it constrains them, or it actually puts them in a position to have to sell assets. I talk about that all the time in my MMT Trader report and, of course, in the emails that I send out to subscribers. So that's about it. Currencies, I spoke about Canadian dollar. You have one massive, massive mother of all short positions in the Canadian dollar right now. I have not seen total open interest in Canadian dollar futures as high as this ever. All right, so that's something. Dollar yen, I expect that to start to trend back down again. And bonds, well, of course, if you're looking at an outlook of higher rates, bonds are going to go down. I mean, that's just what happens. When rates go up, bonds go down. In between these rate hikes, like we've seen, since the last rate hike, you get a little bit of a rally in bonds, but that's a rally you got to sell. It's a rally you got to sell, all right? When the central bank is raising interest rates, the trend of government securities is down. Very simple. They tell you to sell or they tell you to buy if they're cutting rates. You don't have to be a genius about this, all right? You got to sell the rallies now. You're in a rate hike mode scenario. So, and by the way, the Fed's comments yesterday after the meeting were very upbeat. So it looks, and judging again from the where the Fed fund futures are, the 75% probability, that's on. All right, that's happening. All right, so that's pretty much the wrap up. I sent out an email to MMT Trader subscribers. Again, if you want that email, just go right now and sign up for a 30-day free trial. I just gave the whole breakdown of what I expect the jobs report to be tomorrow, where the payroll numbers should be. So I give you the whole breakdown in that email. If you go to pitbulleconomics.com and sign up for the 30-day free trial, I will send that email to you. All right, everybody, have a great evening or morning, and I'll see you guys tomorrow. Bye-bye.